Good morning, traders. It is 8:04 a.m. Chicago time on the 26th of May, 2016. It's a Thursday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, we just got the initial jobless claims came in at 268,000 versus 275, slightly better. Durable goods also came in at 3.4, vastly beating the zero point 0.5 estimated. Durable goods ex transports was only marginally higher at zero point 0.4 versus zero point 0.3. Overnight, one of the key items that I saw was Japan's prime minister is warning that there's another Lehman Brothers scale crisis looming on the horizon. He was speaking at the G7 meeting. The Japanese Prime Minister Shinzo Abe compared the current situation to the global financial crisis of 2008-2009. Reuters reports that Abe noted that 55% drop in commodities prices since 2014 said fiscal spending was necessary to combat the global slowdown. The summit set to conclude Friday. Those are big words from the country that provides the world with a large portion of its liquidity. Something to pay attention to, but the market kind of shrugged that off. We didn't see much of a reaction in the overnight trade. We just continue to chug along on the buy side, and that's I find that interesting. As far as what we're expecting for today, I want to remind you that Yellen speaks tomorrow at 9:30 Central, 10:30 Eastern. For today, for the rest of the day, we have at 9 o'clock Central, 10 Eastern, we have pending home sales month on month expecting 0.7% and year on year expecting 0.1%. This is for April. Then we have natural gas at 9:30 Central, 10:30 Eastern. We have Kansas City Fed at 10 Central, 11 Eastern. -3 is the expectation. Again, the G7 summit is taking its course. Fed Speaker Powell is expected to comment on the economy at 11 Central, 12 Eastern, and that's really it. The usual 7-year note auction and so on. That's what's left on the calendar. So let's have a quick look at what was expected yesterday here. These are yesterday's trader bites. The primary idea for the day, the primary trade that we're looking to stock for the day was an attempt higher, an open auction attempt higher, and selling back towards the prior day's point of control. And then, if anything, it's likely to extend itself down to 2065. And I said that 69.50 is a key price below to note. If that happens, if we happen to get back into the prior day's profile, which we did not. The secondary hypothesis is a push deep, slightly deep into the prior day's profile, and an expecting consolidation. Remember, we left on Tuesday, on Tuesday we left a weak high, so the expectation was for us to take that out, and we were trading above it pre-market anyway. So the idea was on Hypo 2 was an attempt lower, find its buyers, but overall looking for a consolidation day, a resting day. The third hypothesis again was for a rally. It was so for Tuesday as well, and that's the hypo that worked out. The third hypothesis is for a gap zone to remain open, an attempt lower, but a gap zone to remain open, a quick push to 85, potential pullback, but ultimately I'm looking for 94. 94 is a double TPO high or a small double top or a weak high that's been sitting there since the end of April. Hypo 3 is the one that worked out yesterday, although overall the market was more aggressive than what I show here. Here's what things looked like yesterday. So we opened a small test lower right there. We opened at 81.50. We dropped 3 ticks to 80.75. We tagged the 80.75 as I had shown in Hypo 3 right here, this orange or this pink, and then the expectation was for it to push up, pull back, and then continue higher to 94. We ended up going to 92.50. We missed the 94 by 6 ticks, but overall the market put in another P-shaped profile with a lot of concentrated volume up high, up top, just like we saw the day before. The break higher, this churn and push higher to break this initial balance for the day. This is what we call the IB stat, which essentially says the IB stat. Remember, just a refresher, the IB is the first hour's high and low. It's delineated by this yellow line, these yellow lines. Um, the probability on any given day that those yellow lines do not, either one of those yellow lines does not get touched or breached, not touched, but breached by a tick by the time the session ends, the probability that that would happen is around 3%. So 97% of the time, 97% of days, we get a break of either the IB low or the IB high, and we spent the whole day yesterday just sitting sideways. A couple of really decent setups here against the mid. The mid is this blue line. It is the average of the high and low of the pit session. A couple of really decent setups, but I have to admit that it was really, really hard to hang on to these trades because of how choppy and jarred the trade has been. So if you look at this, the way this is trading, we had a clean double top at the IB high, so we have the double IB high stat in play. This implies 82% probability that this IB will break, in addition to the fact that there's a 97% probability that the IB would break as well. So this is the mid setup into the IB high break, but you can see here we took the break and we dropped very quickly, which I believe was very, very odd because we had all this energy down here. We had all this volume down here, and the expectation is that that volume, once it resolves itself to the upside, it's likely to carry through. So I did expect 94 on that mid trade long into 94, but it just went to 92.50 and dropped like a rock real quick. That was not a fun thing to sit through. Also, note that the OTF is the OTF stands for the other time frame. The OTF is kicking in early and is kicking in hard. And what's been happening is we have this nervous open that looks like an open auction, potentially an open rejection reverse. In other words, it doesn't have very much of a driving behavior, and then it catapults. That's an 8.25 point rotation on the ES, 8.25 points without a single 6-tick pullback. The instance of that is 3 sigma wide. In other words, that does not happen. That happens less than 1% of rotations in the ES. Clear OTF presence there. You can see down here. Let's resize these panes here. You can see right here that overall there wasn't much buying on the get-go there. Price kept moving up, but there really wasn't much buying. But on this move up, we had a pretty decent pushes, pretty decent lifting on the offer. I'm gonna say it again. This is unusual behavior for us to leave statistically, historically, for us to leave a gap zone and follow it up with a gap zone after a gap zone. After a gap zone down here, we still have a gap zone down here. For this to happen, the probabilities are very, very low. So it's to me, there's something underlying this that is going on that we still don't know about. I'm not standing in the way of buyers. These days, I just don't see any opportunities to sell. Sell trades are probably good for, by the time you get in, are probably good for 3 ticks and so on. as long as the market stays above the mid, I'm looking for a push higher. Another statistic, and I know I'm inundating you with statistics today. Another statistic, an old one. When we have a gap zone, and a gap zone is defined as an area that's completely untraded. This is a gap zone, not a gap close. This is the gap close right here. We have several gap closes open. Right there is one from the 19th, the 23rd. This is another gap close here. But the gap zone is basically the low of one day versus the higher the prior day. A gap zone that does not close within the first 2 hours has a 13% probability of closing later in the session. Again, past performance is not indicative of future results on these stats. These are easy stats for you to verify for yourself just using a regular Excel sheet. You can look at webinar 4.1 to figure out how to approach these conclusions, and of course all these trader bites. But overall, once this gap does not get filled in the first, not the IB, but the first 2 hours, I'm not expecting it to get filled. Although the incidence of any given day filling that gap is really 50-50 because we don't know when that statistic isn't going to work. So my point in all of this statistical talk today, and it's a little drawn out, is the gap zones that we're putting in. So we have a gap zone, this gray area, another gap zone, and I'm about to add a gap zone up here. This tells me that there's something very unusual going on the buy side. There's some information that we still don't have. I don't know if it's tied with Yellen tomorrow or something else, maybe some sort of QE that's brewing somewhere. I'm not sure, but the market surely is behaving is very determined to explore higher prices and is unable to find its sellers to the point that we have completely crossed this high volume node. So let's pull up our daily. When we look at the daily, essentially what we've done is we've gone from the low volume node. We didn't quite get to 2015.75, and we have crossed this entire area in these last few days. So from this last Thursday till today, we have crossed from one LVN, MCLVN, or low volume node on the composite scale, all the way to the other side, and basically crisscrossed an area of high volume that we've been stuck in for months. This is very, very unusual. So I'm looking for a rest day today. The probabilities for another gap and run or a continued run are fairly low, but that doesn't mean that I'm going to sell the market coming into today's session. It's a crowded area here when it comes to numbers. You can see on the right side of the scale here, lots and lots and lots and lots of lines. It's not normally this noisy, but there's a lot going on in this area, and then the overnight session is not giving us a lot of clues as to what is going on. We just know that below yesterday's value, the market could not hold and has pushed back, and we've essentially moved that point of control up on the overnight, and we're trading right at it. We're not getting very, very good information off of the overnight session, and we're opening in value, in range in value. The expectation this morning, the primary hypothesis this morning, very simply, is to push higher on the open to clear up this high that we put in yesterday, and then the expectation is we're likely to explore that 69, that 85, 75 area, and then make an attempt lower, and then just sit up here. That's hypo 1. I'm not expecting continued rotation up. I'm not expecting a continued rotation up. I'm expecting a rest day today. The primary hypothesis is an attempt higher towards 2093 and a rotation back into value, an attempt lower to see what is below here, a test of 85.75, and I expect it to finish somewhere in the middle. I'm expecting something that looks like a doji candle by the end of the day on hypo 1, okay? On hypo 2, on hypo 2, I'm looking for from where we are now at 2090, I'm looking for an attempt lower, a small bounce. We have a gap close right in this area. I expect it to be fairly quiet, and I expect it to start to push higher, make an attempt higher, and then start to roll over. Again, finish up in sort of a doji, but the hypo 2 is looking for a test lower first and then an attempt higher once it finds its buyers. Okay, hypo 3, again, hypo 3 is played out the last couple times, is again bullish. Hypo 3 is a push lower, finds its buyers, and then continues and takes out that 94 and continues higher towards the all-time high of 21, or the prior all-time high of 2100. That's hypo 3, and that's how things are shaking out for this morning. I know there's a lot I'm covering here in the last couple of days. There is a lot going on. There is a lot going on that is unusual, and I want to make sure everybody's on board with how these hypos are being created and how the plan's coming together. That's more important to you, in my opinion, than just getting an answer. Okay? Hopefully that helps you out. Good luck, and I'll catch you tomorrow. Take care.